That would be Wyclef Jean's Yelly Haiti. A lot of people questioning him. There's some allegations that the charity's helping the directors more than Haiti itself, and it's prompted Wyclef to get on YouTube and release this statement. Take a look.
I never and would ever take money from my personal pocket when it comes to Yelly. I myself have put $1 million inside of my own foundation. So not only I denounce all of that, I'm disgusted by that.
So how do you know if your donations are going to the right place? Here with more is the watchdog on Wall Street, Chris Markowski. Good morning.
Good morning.
Chris. Okay, let's talk about Wyclef.
Okay.
So he readily admits mistakes have been made. Documents have come out from the Smoking Gun saying from 05 to 07, he was paying some of his directors for companies they run. What's going on here?
This is not the first time I've seen this or that this has happened. Many times, celebrities, wealthy people, they set up foundations, various different things where they can hide money in regards to taxes. And often their intentions are good, but sometimes they end up employing people, putting people in certain positions. They end up getting paid a lot. And often for every dollar that goes into the charity or the foundation, very little money actually goes out to the people that really are in need. That's important when you're looking to donate to somebody or any type of charity. You want to see what the efficiency is. Like anything else, you want to make sure that the money that you're donating, your hard-earned dollars, are going to the people that need it best.
Sure, and one of the first things you said is never trust a charity where someone is cutting themselves a personal check. In 2006, he got a check, 100 grand. He says this was a performance fee for a benefit he did in Monaco, but he said, I didn't pocket any of the money. It went to production costs.
We have to see how this one of the tricks. And like I said, I don't know the intricacies. I don't want to condemn this guy because I know what's going on, but this is one of these tax tricks where you have a foundation set up and you're getting paid by the foundation for doing various different things. Listen, there's great foundations out there. The Bill and Melinda Gates Foundation. There's so many different, wealthy people that set these things up. They don't ask for money. They put their money into it and they use their money to support the causes that they want. We've got great charities out there. You mentioned the Red Cross a little bit earlier, where you know that the dollars that your hard-earned dollars are going to help the people.
And there are places you can go to check out these charities, such as.
Well, I mean, there's various. The state and local government's supposed to keep track of how this stuff works. This has come to light. I would go look in them. You got to look at the books. They have to provide their books. That's another key too. Some of the charities we've looked into in the past have gone lag time for years without actually showing how their money gets out and where it's going to go.
Okay, and lastly, Wyclef has said, hey, look, we've raised $2 million thus far on these text messages. People are sending text messages, $5 donations. Haiti has yet to see any of these donations. When is the appropriate time that these charities who say they're raising money start giving money to the causes?
Let me ask you a question. If you raise, I don't care, $50 million, you send $50 million to Haiti right now, what good is it going to do? They need food, supplies, doctors. You need to send it to an institution that has the infrastructure to go about providing those various different things. Money to them right now is nothing more than paper. It's not going to feed them.
Okay, well, people out there need to do the research. Great information. Thanks so much, Chris.
So it's a buyer's market when it comes to real estate, right? Well, not so fast. New guidelines from the Federal Housing Administration may have made it harder for you to get a government-backed mortgage. Here to break down the new guidelines and talk about their implications is the watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning.
All right, so let's just jump right into this. Talk about some of the proposed changes in lending, in mortgage lending by the FHA.
Well, they want to be raising some of the fees, some of the insurance that's involved with handing out these various different loans, and this is going to raise the cost for people when they want to go out and borrow money over an extended period of time.
And also raise the bar in terms of who can qualify for what. If you have a certain credit score, for instance, you're going to, if it's low enough, you'll have to put up at least the 10% down.
But even that's too low. That's the problem we're getting into, Andy, okay?
We're looking at some of these, by the way, right here on the screen.
To me, this is lip service, and this is part of the problem. This is why we're in this situation we're in, is when we're giving money or you're allowing people to borrow money that they're going to have a difficult time paying back. You're not doing that person any favors. You're going to cause money problems down the road. You're going to cause problems in the relationship. And, haven't we seen this movie before? Didn't we just witness this? Yes, they're raising the bar a little bit. But what's wrong with renting a home and paying your rent every single month until you can afford to put the 20, 30, 40% down? When you're able to do that,
or buying a less expensive home.
Exactly. I see, this idea. And believe me, this is not about the consumer. This is about lobbyists. This is about the home building industry going to Congress and saying, here, make it easier for people to buy homes so we can sell more homes and we can also raise the prices.
See, that's what I love about the honesty that you provide us on this program, because a lot of times, you hear something like this and it's all sort of woe is me when you hear, oh, they're making it tougher for people. Well, the point is it was too easy in the first place.
Absolutely.
And like you said, it wasn't doing anybody any favors. We had, we just went through 10 years of people buying homes that they couldn't afford.
And listen, it's my business. I help people out with their finances, and I've seen what, money problems, what they can do to families, how they can tear people apart.
Divorce.
Yeah, and how people end up chasing their bills. You end up becoming a slave to your stuff and a slave to your bills. Your home should be something that you can enjoy and you can afford, not something that's going to be a burden every single month.
Okay, so in the short term, these FHA new requirements may, in fact, cut down on a little bit of sales in the short term, but in the long term, you're saying it's going to be doing the entire market a favor.
I think so. Now it's going to do the taxpayers a favor, because basically what these FHA loans do is we, the taxpayer, are guaranteeing them. These banks wouldn't be making these loans ever in their right mind unless we, the taxpayers, were backing them.
Right. And so with this, hopefully we'll have in the future fewer foreclosures and fewer need to tap into this taxpayer.
Well, I'm not sure about those fewer foreclosures. It's going to be a long way down the road. There's still a lot more that have to come through the pike, but in the long run, we'll be all right.